What's good, everybody? I appreciate everybody for showing up on the live. Thank you for spending your most precious asset, at least the most precious asset, in my opinion, known to mankind, which is your time with me on this live stream and on all of the previous live streams. Well, so first and foremost, if you're here, make sure you smash the like button. Make sure you hit subscribe so that you know every time that I'm going live and whenever I'm dropping my videos so that you can get in on these profitable trades, similar to the trade that we are looking at right now that's in like literally what 1,500 more dollars profit. We already locked in. Let me see. $1,300 profit right there. Bing, bang, boom. So make sure that you are obviously following the channel and subscribing to the channel. That way, you know, whenever I'm going live and doing all of these different things, that way you can get in on the levels, you can get in on the trades if you so happen to choose to do so. Right. And obviously comment anything that you want in the relevant sections below. This is my public service announcement to everybody. If you want me to do any type of like altcoin or whatever analysis on any asset, I don't care. We can do crude oil, we can do, you know, Apple stock, you know, we can do a Forex pair, we can do, you know, an altcoin or whatever it is that you want. Just drop it in the chat, man. Drop it in the chat. Let me know you're here. Make sure you bump these likes up and let's keep it going. We've taken $3,200 over the past 2 weeks and turned it into over 10K. Okay, so that $3,200 is now worth $10,500, which is great. Obviously, by doing that, I was able to start scaling up my position sizes. So now I can take $6,000, $8,000 positions comfortably, right? So that's exactly what we're going to keep doing. We're going to keep scaling up the portfolio. We're going to see how far we make this bad boy run. So with that being said, let's get into it. Let's get into the charts because Bitcoin absolutely tanked. It did tag a key level that we've been talking about for days and days and days and days, right? Ever since I've started these live streams, I've been talking about these same levels, man. And I'm just going to pull it up on the screen. You're going to see exactly what I'm talking about. And you're probably going to recognize it. If you've been watching these streams for long enough, you will absolutely 100% definitely recognize this level right here. And we're going to go ahead and make a baby droop. That way I am out of the way so that everybody can see exactly what it is that I'm talking about. And then bang, bang, boom, we're right over here. Okay, cool. And we just closed an hourly candle. Well, actually, yeah, we just closed it like a minute ago. So anyways, here's my point. Get into it. This is the fixed range volume profile that we've been talking about for like literal days, man. Like days and days and days. Where I said, look, we're at the top of this visible range volume profile. I think we're coming right back down here, right? And we did. And unfortunately, I did not take my last bit of profit here. My bias is that we're probably going to come back down here and retest this again. So I'm not really super worried about it. If we look historically speaking, all right, let's look at this visible range volume profile and see what's happened. Okay, so we came down here, we tested it here, right? And we even fell through it a little bit and bounced, right? Okay, cool. That was one test. This time we came down and we kind of tested it a little bit, but then what was it? 1, 2, 3, 4. It was a couple days later, we came back down and retested it again, right? So these are the only 2 times that I'm seeing that we didn't test this like on back-to-back candles, at least on the 4-hour chart, right? So then if we go over here again, and there's a reason why I'm explaining this, right? We tested this again on 2 candles, right? 2 back-to-back candles right here. We tested it on 3 back-to-back candles. Actually, I think 4. That's 16 hours worth of data right there, right? Then on this one, we only tested it on 1 candle. So that's another one that we only tested once. On this one, we tested it, dude, so many times. Like we really struggled with that level to get bounce from it. And then here we are testing it yet again. So I think I'm going to have a take profit opportunity here. I might not even take profit. What I'm probably going to do is leave this short open because if you look at this short, I mean, this short, I'm short from like the tippy top, man, 101.5. And the tippy top of this was about 102.5, I believe. Yeah, 102.5. So I got in, my short is within 1% of the literal top of this range. So I'm probably going to leave this short open. And then what I'm looking to do is I'm going to enter a long here and try to ride it up, not there, but up to the value area high, which is right around here to about $98,300. Now I do want to do something really quick that I think is going to blow some people's minds, man. So we know what this fixed range volume profile covers. It covers the parabolic move from about 80K all the way up to the new all-time high. Now, I just pulled another fixed range volume profile that I am calling the full fixed range volume profile, right? The full fixed range. And we're going to pop it up and you'll see it looks a little different. looks a little different. But guess what happened? We barely just kissed the bottom of this fixed range. So my bias is that right here at about 92.1 to about 92.5 is a really good entry level for a potential long position. Okay. And why do I think that? Because historically speaking, we have bounced here. Now, if you're going to enter a long position here, what would make this trade not work, right? Okay. What would make this trade not work is if first and foremost, this 100 moving average, this is the lowest it's ever been, right? This is the lowest the 100 has ever been. You see the 100 right here. This is also probably going to be the lowest that the 200 has ever been, the longer that we stay under this. Once that 100 moving average or the 200 moving average, this green line right here, curls under this point of control, that's bad news bears for Bitcoin, right? This 50, if we stay under it, is going to start curling down. And the 100 is about as low as it can possibly be, right? So here's my bias. If I'm going to enter a long position here to ride it up to either the 100 moving average or try to, target the point of control for a full extension on my targets, right? Because everybody knows, like, I do more than one take profit, right? I'm going to do more than one take profit. Just like on this trade, I've done 2 take profits already, and then I'll have a third one, sometime. So here's my point. If you're going to enter a long trade here, which we got to pull up the long trade tool. Give me 1 second. Long position. We entered a long position, say here, right at that resistance point, and we even targeted this 100 moving average, maybe just below it. And then we would want to set our stop loss outside of this low, right? Right? You want to be under that low first and foremost. You probably, if you want to be super conservative about it, you'd probably want to be under this low, well, which is at about $90,000. So let's say we put it right there, right? This gives us a 2.5 risk to reward ratio. And if we try to take it all the way up here, it's a 3.3 to 1 risk to reward ratio, right? So think about it like this. If you're risking $1,000, then your downside is going to be 1.85% to your upside of 6.12%. Now, whatever your leverage is, say you're at 2x leverage, then your upside is 12% on your money. Your downside is 3.8% on your money. So always take that into account, like what your position size is and what it's going to be, right? But in any case, as it sits right now, we have taken some massive profits on this trade. We called this move live, right? We've got over $1,600 in or $2,600 in profits. If we were to just close this position right here, obviously we have 1,300 locked in and another 1,400. We've taken 67% of our position off of the table here because what we had was 0.6 Bitcoin at a 10x leverage is about a $6,000 position. So to make $2,600, potentially, if I close it out at $1,400 more profit, to make about $1,600 to $1,700 profit or $2,600 to $2,700 profit on a $6,000 position in 2 days is absolute insane gains. And to anybody that took that trade with me, congratulations on your gains. This is what we're looking at right here. If we know that our thesis is broken here, then what do? Right? This is on the 4-hour chart, by the way. Okay. So let's say that Bitcoin does break down, right? It comes back up here. We bearishly retest the 100 and we come back down here and we enter our long position, but then we fall down here. What you would want to see is a fall and then a bounce from like right here, this range right here. And then you would want to see a bounce back up to probably this value area low and then a fall. And that's where you would want to enter a short position right there. And again, we would want to understand where our thesis would be wrong. So if we entered a short position, say right here, right, we would want to put our stop loss just outside of this value area low. Because once we come back into this value area low and get accepted back into this range, we don't want to be in that trade anymore. And what we would be targeting if we pull up the VRVP, which will show us the exact, volume profile of this entire like range and everywhere that you're going to see on this visible chart. If we pull that up, we will see that our target would at the very least be right around here, right? Let's see. Our target, we would want to see probably over a little bit. Yeah, our target would probably be like somewhere right here, very first target at least. And then our secondary target, if we want to really ride this thing down, is going to be all the way down here, 77 to 80K. I would say probably just to be safe, I would put it right above 80K, maybe 80,000, $81,000 right here, where this, these high volume nodes start to kind of pick up down here, right? So that's a 14x risk to reward. So you would be literally risking 0.86 of a percent to make 12% on that move. At a 10x leverage, that's a 120% move. So if you risked $6,000, you would make $6,000. 7,200 bucks is what you would make on that, and you would lose less than 600. So these are pretty good, in my opinion, trade like risk to reward ratios to be taking these trades. So I'm gonna actually put all of this stuff into some trades folders, and we will see potential trades, and we'll see how those would have played out. I'm probably gonna put a buy order down here and take that exact trade that I was talking about. And what I will probably do is I will probably layer in my buys. We do have a bullish hammer here that came in at the small end of a range. So I'm going to be more likely to long here because it looks like that kind of downward momentum is starting to die off. And we did bounce from key areas of support, which is literally right here. You can see we bounced from 1, 2, 3. Yeah, 1, 2, 3, 4 times. We wicked a little bit below it here, and this will be the 5th time that we bounced from it. And we have not seen this support level hit in quite a while, not since December 30th, and then even before that, it was December 24th and December 23rd and December 20th. So this is actually a pretty good, nice little setup for a long trade, in my opinion. Okay, I'm not saying that it's guaranteed, but this is down here. If you can enter here, I wish I would have been, paying attention here, but I was honestly getting ready for the stream. This literally just happened about past hour. It happened on the previous hourly candle right here. So I was actually preparing for the stream, and sometimes you win, sometimes you win them, sometimes you lose them. My bias is that we will probably on the 1 hour chart come up and bearishly retest this 20 moving average, come right back down here, and then what I would want to see is a bounce, right? Because we do see the 50 that's getting ready to go below the 100 right here, and then if the 50 continues downward and goes below the 200, that's going to be a death cross. But as we know, unless price is up here, when that death cross happens, usually people front run the death cross. Like right here, you can kind of see like people are front running the death cross, like right here, because they can see the blue line starting to curl downward with the green line starting to curl upward. And then you see what happened, like big move downward, right? So my guess is that people kind of front ran this death cross right here. And what we could see is, a bearish retest of this, then a bullish retest of this support level and a bounce, right? So that's kind of what I'm targeting. And to be honest with you, I'm good with the risk to reward on the long trade that we were just talking about, this potential long trade right here, to ride it all the way up to the value area, or not the value area high, but the point of control, or at the very least, the 200 moving average on the hourly chart, right? So the 4 hour chart's going to take a lot longer of an amount of time to play out than the hourly chart is, because it's 4 times the data per candle. So I would be looking, somewhere in this realm right here to take profits on that long position. So I might be flipping and I might leave that short open. Okay. I might leave the short open. And then if we do get up here to this value area high, whenever I long, then I will probably enter the short and add to my short position after I sell the long, and then ride it back down here to see if we do indeed kind of get that bounce to the downside, right? So that's kind of, for the most part, that's kind of what I'm seeing on the charts right now. I want to get down into the weeds a little bit, and I want to see what the 5-minute chart is doing, just to see, where, yeah, we got a lot of green candles right in a row. Let's see what the indicator. I don't really. Yeah. Okay. So we're majorly oversold on the stochastic. So I would expect maybe a little bit of a move downwards here. The RSI is trending upwards. The RSI can stay up here while the stochastic resets. And oops, and comes like kind of all the way down here ounces. So that's probably what I'm seeing is probably going to happen. We do have double green dots printing on market cipher. This is the 5-minute time frame. That doesn't it's not super powerful. Market cipher is not going to be super powerful on the 5-minute time frame, but used in confluence with other things, it can be, somewhat powerful, especially when we've bounced from these previous like kind of like supports right here. The one thing I do want to kind of show people here, let's see what are the moving. Okay, so the moving averages are in a very bearish position, but if we continue, let's take this freaking VRVP off of here, just getting in my way. If we did reclaim the 9 and the 20, right, which is good, right, but we did get rejected off of the 50 on the 5-minute right here. With the 9 curling up and crossing the 20 right now, it's going to now head up towards the 50, the 200, and the 100. So my bias is that if we continue upward and we can reclaim these moving averages, you will see a move up. You will see a move up. These moving averages have been in a bearish pattern for quite a while, basically ever since we were all the way up here, right? This is where that bearish, kind of sentiment started, where it started to cross over all of these different moving averages, right? The 200 crossed above the 50, and that was a death cross, right? So what happened shortly after that, right? The 50 crossed below, and then boom, we had a massive, massive move downwards. Massive. Look at this thing. Literally tanked the F out. So yeah, that's kind of my bias, is that we could see a little bit of a bounce here, but my guess is we're probably going to come back down and test this value area low a little bit closer. Even if it's not this one, even if it's this value area low, right? We basically hit that, right? But I could see us coming right back down and retesting it, right, at the $93,000 level or so. The best entry you could have gotten on your long was 92.5. Yep, almost exactly 92.5, right? That's pretty good entry on a long position. I wish I would have gotten it. I wish I would have gotten out of my short at that point too. But it is what it is. You don't have to buy the top and sell the bottom in order to be profitable, as evidenced here, right? $1,400 profit, $1,300 realized, $2,600 trade, So that's exactly what we're going to keep doing. We're going to keep riding this thing for what it's worth, right? So let's see what's happening on the 1-minute chart to see if there is any type of reversal. Okay, so we got, this is indecision right here, right? Look at market cipher, red dot, green dot, red dot, green dot, red dot, green dot, red dot, green dot, red dot, right? Like, and then money flow has crossed over. VWAP is still below. Now it's trying to print a green dot on this candle, right? I'm not going to pay too much attention to that. I'm actually going to go down here to the RSI. Yeah, RSI is pretty overbought. So I could see us going down here yet again before a bounce, and that would be a really good risk to reward on a long trade. Secondarily, we do see the stochastic, which reacts quicker than most. If the stochastic does move us upwards and we take price up, we are going to be reclaiming this 200 moving average, which is a really good sign. The 50 is starting to curl up, stuff like that. Again, this is a 1-minute chart. Like, you cannot take this verbatim, right? You cannot base all of your analysis on this, because right here, the 50 crossed again, and then, we moved up a little bit, and then we just tanked right back down. 50 crossed up here again, immediately crossed back down, we tanked. 50 crossed up here, immediately tanked again, right? So my bias is that, you're probably going to see something like this and come back down and bearishly test this channel, right here, right? We'll see what happens. But why is RV? Oh, that's not the VRV. Okay. So yeah, there's not a lot to see right now on the 1-minute chart. You're just kind of on a wait and see basis. Let's see what the 30-minute chart is telling us really quickly. Okay, so yesterday we were talking about how we had to hold above 97K. We could not do that, right? This is the 97K level. We came up and we got rejected. We came down here to the value area. It's pretty, actually, it's almost like a textbook move. Like, this right here was a textbook move all the way down. And that's exactly why we had this short open, right? Because we saw these things happening. And that's why we kept this short open. And look, because that short stayed open, we are now in double the profit that we had on half of the position. So this was the profit that we took on 0.4 Bitcoin of a short. This is the profit that we have right now on 0.2 Bitcoin of a short. So that's why we left that position open, because we're like, okay, there's further downside. Now, could we get rejected right here off of the 9 moving average on the 30-minute? Yes, we could. The 100 is coming below the 200 as well. So I think we may see, further downside. But a lot of times whenever this stuff is happening, like, the move has been made a lot of times, right? So I'm not 100% sold that we're going to keep going down. But I mean, it's, on these higher time frames like the hourly, it does look like we're going to continue downward. I mean, we've got the 50 crossing below the 100 right now, right? We've got the 200 going up, and it's going to be above the point of control soon, right? This is the point of control. You've got the 50 crossing the 100 and then getting below the point of control. I mean, could you get a bounce here to the 20 because the 20 is a magnet? Yeah, maybe 95.7, something like that. I actually have a couple of shorts open that I was trying to get. One was at 97K and then one was at 98.4. I didn't get either of them, unfortunately, because I was like, okay, we're going to continue downwards, right? So that's essentially what I'm seeing on the Bitcoin chart right now, at least on the smaller time frames. It does look like the higher time frames, like the smaller time frames, they do have a little bit of like breath of light kind of breathed into them, but the higher time frames are still showing me more downside, right? And I want to go to the 4-hour and see what the 4-hour is telling me. Actually, let's do 2-hour first, right? And where in the heck is market? Oh, I deleted market cipher. Market cipher. Go here. Market cipher. That's oh, that's because it's in invite only. My bad. Market. All right, I'm taking these free versions off here. This is making. Is this an invite only? Here we go. All right, sorry about that. Here we go. Market cipher B. Okay, my bad. Okay, so we do have a red dot on the 1-hour. I mean, money flow still in the red, right? It's just crossed over into the red. I think we've got further downside here. If we move up here, if we move up here, if we move up here, I'm probably going to enter more shorts, right? Like I want to enter a short at 97 and I want to enter a short here at the value or the point of control. Do I get it? I don't know. I might put one here at 96.1, where the 200 moving average is on the 1-hour chart or on the 2-hour chart. And let's see where the next big resistance is on the 1-hour chart. 97. Yeah. So I've already got an order there. Yeah. 96. Yeah. I mean, that's kind of what I'm seeing. I mean, look at the 3-hour just really quick. See what's happening on the 3-hour. Yeah. I mean, bearish pattern forming here on the moving averages. It could cross to the downside. You've got 96 is the 100 moving average. That's going to be a major level of resistance. You've got the red dot on market cipher. Money flow is coming out. VWAP is crossed over. Momentum has crossed to the downside. You've got RSI that is crossing downwards. I mean, everything looks, yeah, I mean, everything looks bearish on this. And for whatever reason, my market cipher does not look the same. So we're just going to control Z until it pops my market cipher back up, because I had my settings saved and they're perfect. And I don't like market cipher. There we go. That's the market cipher I want to see. Boom, baby. All right. So now let's get back to the 4-hour chart and see what's happening on the 4-hour chart time frame. From a overarching perspective, this could be a lower low, okay, or a lower high. Okay, so this is your higher high. This is your lower low, right? This could be your next lower high coming in here to set a new lower low, right? So, I mean, that is market structure 101 right there. It's incredibly simple. Let's take these things off and let's see if we can draw a trend line, because it does look like there is a a little bit of a trend line that we can draw here. So I'm going to go ahead and do that. So from the tippy top to right here, boom. Yeah. Yeah. I mean, there is a downward sloping trend line here. I mean, you're probably, I mean, I hate to say it, but I mean, I don't hate to say it because I'm in a short. So like it is what it is. But yeah, you're probably going to see it come down here and bearishly retest this 88K range, which is kind of like your line in the sand, right? Where we saw this kind of like consolidation and support that we flipped from resistance to support right here in this range. We can put a ray there if we want to. Give me a second, put the ray there. Bam. So my guess is we're probably going to come down and test the 90K level. Maybe even less than that, to be honest with you. It'll probably be somewhere in this realm. Let me zoom out just. Yeah, it'll probably be somewhere in this realm, to be honest with you. And as you can see, that was a key level of support right there. Let's delete this. There's a key level of support right here whenever we were trying to move upward, right? We rejected here. We kind of tried to, then we established it as support. Now we're moving up. So my guess is that what's probably going to happen is we're going to see it come, somewhere down here and then bounce. Okay. This does look like it's going to set a lower low, and because we've just now set a lower high, right? Now, could this be a WV pattern? It could, but I don't see it. And what do I mean by a WV pattern? That's a bullish pattern, by the way, just so that people understand what a WV is. It's where you kind of come here and you make W, right? A WV pattern, and that is a bullish pattern that will break up, right? So what you want to see is whenever you print the middle of this W, right? You want to see price come back and hit it. So, I mean, there is something to be said for a potential long entry right here, which is why I'm saying I would consider entering long somewhere down here if I had the opportunity, just because the risk to reward on it is absolutely insane. And I'll show you exactly what that trade was, just in case you weren't here for it. But this is the trade right here, right? Write it up to the value area or to the point of control and potentially write it back up to the top of this channel, right? Right around the $101,000 range, which is where we actually entered our first short, which is what was about 1015. Then you short it, bam, right back down to about $86,000. Boom. And we become, the downtrend traders, right? But the good news about this on the 4-hour chart is if anybody understands what happens on downward trending channels, what do they normally do, right? On a downward trending channel, what does it normally do? Eventually, it breaks up, okay? So what is the most likely scenario on a downward trending channel like this? Well, my guess is that the most likely scenario is going to be something along these lines. We've only tested this channel twice, right? So we've come down, we tested it here, we fell to the middle of it, we retested it again, we came back up. We have not tested the bottom of this channel yet. If we come back up and test it a third time, my guess is we're going to fall again down here to somewhere in the $84,000 to $80,000 range. And that's where we catch our leg up and we break out of this channel and hit those new all-time highs. Usually on the fourth or fifth hit of a downward sloping channel, you're going to see, that would be the third hit, fourth hit, bam. And if we hit this massive level of support right here, where you can see I have my alert set at the $80,000 range, I could see us bouncing up to those new all-time highs. And what we really need to see in order for bull market to be in full effect is this. Ethereum, baby. It's all eyes on Ethereum, right? Look, it's doing almost exactly what I was saying it was going to do, right? Comes up here, capitulates a little bit, comes back up, falls down. Here's the key level of support. We bounce, we go up. But what we need to see is this right here. We need to see a continuation. We need to see a continuation of this bounce and we got to take out these highs, right? We got to take out those highs first and foremost. Then what you got to do is you got to take out these previous highs, which is the 4,700 and some odd dollar range. But if you understand what's going on this chart, there is a cup and handle right here. And if we came all the way down here, we would be retesting the bottom of the cup and handle pattern, right? So whenever we're retesting the bottom of the cup and handle pattern, we then bounce. And what does our cup and handle measurement give us? Almost a new all-time high. So we got to come up here to about $4,850, $4,900 to take that new all-time high. Once we crack $5,000 on Ethereum, that's what's actually going to spark altcoin season. Okay, when Ethereum hits its new all-time high, because altcoins don't care as much about Bitcoin. They care about other altcoins, right? Bitcoin can move by itself and do its own thing and all that stuff. But unfortunately, in the pumps, altcoins just don't hit the same trajectory as Bitcoin does. A lot of times you'll see money leaving altcoins to go into Bitcoin when it's pumping. So then altcoins will either capitulate or go down a little bit, or at the very least, not go up in the same trajectory as Bitcoin. What do I mean by that? I mean, if Bitcoin goes up 10%, yeah, altcoins can go up 20, 30%. But if, say, let's take AVAX, for example. An asset like AVAX that is, it's at $38, right? What was AVAX's all-time high? $135. So even if AVAX goes up 30% when Bitcoin pumps by 10% to get to the new all-time high, right? Say Bitcoin goes up 15%, hits a new all-time high, right? AVAX, even if it does 3x what Bitcoin did, it goes up 45%. What's a 45% move for AVAX from here, right? A 45% move is literally right here. $55. It's not even half of its all-time high. So that's my point. Once Ethereum catches its legs, that's when you're going to see these types of altcoins starting to pump up and go to their previous all-time highs and hopefully a little bit further. Now, are the smaller altcoins going to go to their all-time highs? Probably a little bit easier for those to go to their all-time highs rather than the larger market cap coins that are in the top 20, top 50. Will AVAX hit its all-time high? Yeah, it might hit its all-time high. Will it do 2, 3x its all-time high? Probably not in this cycle, unless Bitcoin goes to like $250,000, which I don't necessarily think Bitcoin's going to $250,000 in this cycle. I think it maybe tops out at 180, right? 180, 190. And we have fib pulls that can support that as well. So my bias is that whenever that pump comes, it has to come in Ethereum in order for it to trickle down to the other altcoins. And I want to show you some key levels on Bitcoin for you to watch if you want to take trades here, right? So the first level that you're going to want to watch are these Fibonacci, right? This is the Fibonacci from this kind of move right here, right? If we measure this, and this has changed since yesterday. So if we measure this, we're coming up and we retested, if you look, we're coming up to try to retest the 0.236 on this right now. We bounced all the way down here. A lot of times you'll see a retracement to the 618, which is why I have two orders. One's at 97 something, which is just under the 0.5 and just under the 100 moving average, right? On the 4-hour chart. And then I have one at 98.3, which is just under the 0.618 fib. Okay. So if we come up here and then we retest the 0.618 fib and we fall, that's my point, is a lot of times you will come in and you will test this. This is called the golden pocket. This is a Fibonacci retracement from this high all the way to this low. Now, that is for the lower high to low, right? That's what that fib is. Now, I want to show you this other fib that will give you a little bit more insight, okay? And it's going to be this one right here. From the very tippy top all the way down to the lowest level, which is right here, and you will see where this thing could retrace to. Where did it go? To the 0.618. Why did I short here? Because that's where the 0.618 was. That was where the value area high of this was. Boom. Right. And that was where this key level of resistance was from this previous swing high when we fell from the all-time high right here. We tried to catch right here, right? At the we tried to catch right here at the point of control and bounce back up, but we couldn't do it, right? So we fell through the value area or the point of control and went directly to the value area low. Then we came up, got rejected off of the point of control, came back down to the value area low, rejected off the point of control, back down below the value area low, rejected off the point of control, capitulation, cup and handle formed, boom, blast to the upside, value area high, 0.618 fib, massive resistance right here, trend channel, massive resistance from the trend channel on this. Where is the massive resistance from this trend channel right here? 1, 2, 3, 4, 5 hits. Boom, breakdown, right? So that's why I took that short, okay? And I know that that chart just got really friggin' complicated, really friggin' quick. But it's not that complicated. There was like 4 confluence levels right here that were telling me like, hey, you should be shorting and not longing, right? So we can take all this stuff off. Anyways, here's my point. This is the 618 fib, right? We came back down and almost hit the 0% line on this. So we almost hit the 0 line on this fib. Could we bounce? Yes, we definitely could bounce. My bias is that whenever we bounce, usually what happens is whatever level you bounced to previously, you're not going to bounce higher than that, right? So for example, on this one, we bounced to the 0.5, right? Then we fell almost down to the 0. We bounced back up to the 0.5. We tested it again. We fell again. We fell all the way down here. We bounced up. Boom. We hit the 0.32. We went all the way down to the 0 line here. We hit the 0.23. We came back down. We hit the 0.382, right? We tried to bullishly retest it. We came up. We fell short of the 50. We came up, tested the 50, blasted through, hit the 0.618, and we've lost all of the gains. Okay, look what happened last time we tested the 0.618. We lost all of the gains. See what I'm saying? So now, did we know that this was the 0.618 back here? No, we didn't, because that 0.618 was drawn off of this low right here. But you can kind of see what happened at that point. Here's my point. I think that we could potentially come up here to the 0.5 all the way up to, 99,800 potentially, right? And we know that's a massive resistance level. My bias is that we will probably only come up here to about the 0.382, right? And then see a little bit of a fall and probably set a lower low inside of this parallel channel that is trending downwards, right? Could we come all the way up here to the 101 level? Absolutely. We 100% could. Is it probable that we're going to do that? No. The market is favoring downside. Why is that? Because we're seeing a nice rounded top on the S&P chart. This is the weekly chart too, by the way. If we go to the 4-hour, it looks even worse. We're seeing a nice rounded top on the S&P. And if the S&P has lost on the 4-hour chart, the 50 and the 100 and the 20 and the 9 moving average, only thing that's left is the 200. If you lose that and you lose this key level of support, bam, you're coming all the way down here to about $5,120, right? Somewhere in that realm, or maybe $5,200. You do have a previous swing low right here where you're going to have support at $5,400 on the S&P, but that is it. That is literally it. So if the S&P falls, dude, Bitcoin's going to fall. It doesn't matter what people think. Let's line up the 4-hour charts, man. Line up the 4-hour charts. December 11th, right here. Where is December 11th? Okay, December 11th, right here on the 4-hour chart, right? So what happened? We saw a little bit of a pump in Bitcoin, massive dump on the right after the 17th. On the 11th, let's see, where's December 11th? We're on the 4-hour chart. So December 11th, we saw capitulation and then a massive dump on the 18th. The same stuff. Then we saw a little bit of a bounce, right? Boom. On the 20th, bounce, right? On the 20th, bounce, boom. On the 26th, big fall. On the 26th, big fall. Pump up until the 6th of January. Pump up till the 6th of January. Massive fall. Massive fall. Like, you got to pay attention to these markets, man. You got to understand what makes Bitcoin move. Monetary policy makes the S&P move. The S&P makes Bitcoin move. It is what it is. People can be mad about it all they want. Oh, it's not correlated. It's not correlated. Then tell me why I just correlated the crap out of it. It is correlated. Watch what the S&P is going to be doing. S&P's favoring massive downside. It's got about what? It's at $5,900. It's got $100 until it breaks the 200 moving average, man. If that happens, Bitcoin's probably going to 80K, is my point. If the S&P can catch a leg up, then Bitcoin will most likely catch a leg up with it, okay? All eyes are going to be on the S&P over these next couple of weeks to see what happens, because that is going to determine what happens in Bitcoin. Whether you like it or not is irrelevant. Facts don't care about feelings, right? Neither do numbers. Numbers don't care about your feelings. Neither do the trades. Neither do the charts. We trade the charts. We don't trade emotions. We don't trade like biases. We don't trade any of that stuff. Let's see what we got in the comments section. We don't really have any comments. We got this one guy, Duprees. You can clearly see now that crypto money is moving over and selling off, but XRP is green and coming up within the ranks. The pump will be shocking in the coming days. I'm unclear on what you're saying is going to pump in the coming days. Is it going to be Bitcoin or is it going to be XRP? Let's look at the XRP chart. Let's see if we can unearth what Duprees. XRP is not pumping. XRP is not pumping. It did hold its must-hold level, right? That's why we marked this out here. Actually, that could have been a nice little trade. It must hold this level. It's still trending downwards, man. It's not pumping. So this is a downward trending channel right here. This is a downward trending channel. It is it's a downward trending wedge, right? So there is a line in the sand though, right here, but it's going to keep bing bonging in here, and then it's going to have to make a decision. Then it's going to run into massive resistance at $2.62. If Bitcoin's going down, XRP's going down. I hate to say it to you, my friend, but it's going to happen. So it could come up here to 262 and then totally ride this channel after it's flipped all the way down. And then once it loses this level, it's over for XRP. It's coming all the way down to $1.50. And then after that, it's coming all the way down here to $1.30. Okay. Why is that? Because this level is the level that it needs to hold. This is the liquidity level, right? This is the literal liquidity level. And actually, we can pull up the VRVP or VRVP, and I'll show you exactly what I mean. This is where volume falls off. Okay, right here, this is where the volume falls off and becomes nothing. Up here, there's massive volume. And you're going to see massive selling pressure right here at this, right? That's just a fact. We're looking at it live. Then you see this is the support level. If it falls from here, right? If it falls outside of here, the next big volume node is right here at the $1.50, right? And then where? Right down here. This is where that ends, right? That volume node ends. And then you've got another big volume node all the way down to $1.14. XRP has massive downside. XRP has massive downside. XRP does not look bullish. There's nothing on this chart that screams bullish to me, except for the fact that it's bounced off of this trend line 3. If it hits this trend line a fourth time, loses this level, comes back, bearishly retests it, it's falling. That's that. And it does have a line in the sand somewhere around the 20th of January, which is, surprise, Inauguration Day in the United States. You're going to see a lot of the charts lining up with a lot of these like very key dates and levels and stuff like that. Like it's not by chance, man. This stuff, like a lot of times people are like, oh, the news drives the charts. No, this happened. They were like, oh, weak jobs data right here. Wrong. The jobs data, they knew the jobs data beforehand. Do you think the people that basically make the markets what they are, do you think they didn't know what the jobs data was going to be? Of course they did, right? That wasn't the jobs data. Guess what it was? They told you that the jobs data was going to come in horribly beforehand, right? Before it even printed, before they told you about it, you could have known that the jobs data was going to be bad, right? And same thing down here. Why? Because we have the fib retracement, 0.618, right? That was up there. That was a massive resistance, okay? You had this massive resistance. I believe it's right here. Right there. massive resistance. That's 2. Then you had this value area high. That's 3 reasons. Then you had this. Nope, not that. Sorry, I can delete that. That's over. That. You had this, 4 reasons. Then you had, where's the other upward trending channel? 5 reasons. Like, we knew the jobs data was going to come in like dog turds here. That's why we entered short here. That's why our trade is in massive profit, because we read the charts. The charts are going to tell you what the news is going to tell you, but the charts will tell you before the news tells you. That's the crazy part about the charts. A lot of people think that the news drives the charts. No, the people that are going to drop the news for you, they know about the news way before they drop it to you. And they're telling all the people that are running these markets. Who do you think owns the news outlet? The people that are running these markets, right? Who do you think says, hey, news outlets, don't run this yet. We got to set some stuff up. Of course they do, right? They run the markets, man. So they're going to tell you, the charts are going to tell you what the news is before the news even comes. Now, I get it. If some black swan event happens, like Russia launches a nuclear invasion or nuclear missile at somebody, like, yeah, okay. Are the markets or are the charts actually going to tell you that that's coming? Probably not. But it tells you a lot of stuff before it gets there. And that's why we front run all this stuff, right? Now, here's the one other good thing that I'm seeing for the downtrend, other than the fact that we bounced off a key support level and bounced off of this value area low right here, right? This value area low, bam, we bounced right off of it. We wicked through it, bounced off, right? And we pretty much bounced off of this other one if you want to pull the full range, right? It's not that good of one, which is why I'm saying I'm favoring more downside. This would have been a hammer, right? But the problem with this is that this hammer came in at a near-term bottom for sure. 100% it did. But the hammer isn't big enough, right? So this hammer actually closed about halfway through the candle, maybe, 33% of the way through the candle. What you want to see is like no wick up here, and you want to see the hammer look like somewhat like this, right? Like very small candle, right? Mainly bottom wick. And rule of thumb is whatever the top of the handle or the candle is, you want to see the close of this candle close within 25% of that, right? So we can do the math on it if you really want to. Like I'll do the math on it and I'll tell you if this is a valid hammer or not, and if we are going to head up because of it. Okay, so the top of this candle was at 94,818.92. The bottom of it is at, and this, I will subtract this out. This is how I'm doing it. Do the math, right? The bottom is at $92,500 exactly, right? Okay, so that means this candle is worth $2,318.92, right? We'll put it right here. So then the candle closed at 94,007.23. Now, in order for us to figure out where is the 25% of this candle, what you'll do is you'll take this and you'll divide it by 4, because that's what 25% is 1/4. So 579.73. We need that to close. The close needs to be within $579.73 of the high of this candle. So then what I'm going to do is I'm going to subtract this $579.73 from the high of the candle, which the high of the candle was 94,818.92, and we get $94,239.19, right? So where did we close? 94,007.23. This is not a valid hammer candle because $94,239 is up here and the close of the candle is down here. So that's not a valid hammer candle, unfortunately. So it still does not favor upside, at least in my opinion. I trade based on rules. You can trade however you want to trade. I trade based on rules. That's a rule. That criteria is not met. I still think that there is a chance for a bounce here up to the 200 moving average or the point of control before a continuation downward. And that is what our trade thesis is going to be. And we will leave these potential trades up, right, until we figure out if that actually happens. Here's our two potential trades, right? Boom, move them over, bam, right? If we come up here, we hit the 200, we sell off. We're going to enter a short over here. Boom, we're going to write it down, baby. We're going to write it all the way down here to $81,000. That's what I'm going to do. So with that being said, that kind of gives you the high level TA on Bitcoin right now. Nobody has requested anything in the comment section right now. So we are going to end the call a little bit early. I do want to give everybody a little bit of knowledge before we leave, though. I want to give people some knowledge. Okay. In terms of trading, all right, if you want to be a profitable trader, this is an epiphany that I've had recently. And I've been looking at charts for 10 years, man. Like, I've been looking at charts since like 2013, 2014. Even before that, I was looking at charts. I just wasn't actively trading. There's been plenty of times in my life where I was trading, and then there's been plenty of times in my life where I was not trading. What I always do is I always watch the market, right? So I do have 10 years of experience looking at charts, right? And one thing that I've always found out whenever I'm trading is that no matter what you're doing, you need to make sure that your risk management and your position sizing is on point. Your trades should look like this, right? Your trades should look like this, where it's very minimal red to upside green. Your setups, your chart setups should look like this, right? Where it's like, this is an A+ setup right here. This was an A+ setup. That's why we made a bunch of money on it. That's why we made over 33% on that trade. We're inching up close to making 50% on that trade, right? On $6,000. That's how, literally, because of this, I have taken $3,200 over the past like 2 or 3 weeks. I think it was since like December 24th or 26th. I've taken $3,200 and turned it into over $10,500. That is almost a 4x at this point. We have 3x that money, guaranteed. So what that comes down to is your risk parameters and your risk to reward on your trades, right? So protecting said capital is the name of the game. What you have to do is ensure that when you're taking trades, you're taking first off A+ setups, right? With high probability win rates. Okay. The more indicators or, trend lines or confluences that you have lining up with your trade is the better. If you have 2 confirmations that say go long, if you have 2 confirmations, that's 50-50. You have a 50-50 chance. 3 confirmations, you have about a 60% chance. After 4 confirmations, that's where you get to 70% and above. And if you have 5 confluences all in the same area, that's when you're getting into an 80 to 85% probability that that trade is going to play out. So for example, on that short trade that we just took, or at least I just took, I don't know if you took it or not. I hope you did. Where we entered at $102,000 and shorted it all the way down here, and that trade is still open. And it's in $2,600 at the very least, $2,700 profit right now, right? We reached resistance at a value area high. We had a trend channel that we were touching the top of. We ran into a previous resistance level all the way over to the left, right? We were extended from all of the moving averages, okay? We broke out of and above the value area high, showing us that it was actually overvalued, and we hit the 0.618 Fibonacci. Even take the being overextended from the moving averages out of there and take the fact that we pierced outside of the value area high, we had 4 confirmations. That's about a 70 to 75% probability that that trade's going to play out to your benefit, right? Then you add those other 2 things in there and say they're even only worth a half, you probably got an 85% chance that that trade is going to play out. The more confirmations. Now, you don't have to have 70 million confirmations, okay? Because at the same time, we also saw that the RSI was extremely oversold or overbought, and there was a bearish divergence on the RSI. And we also saw that the stochastic RSI was overbought as well. And we also saw a red dot print on Market Cipher and momentum start to fall off. So that was like 7 confirmations easily right there, just in and of itself. Like this was probably like a 90 to 95% probability of playing out. That's why I was like, yo, take this trade. And that's why I'm still in the trade. Okay. So I was very confident in this trade. My point is that even though I was super confident in the trade and I entered at 101.5, right? My stop loss was at 102.8. And my take profits were all the way down at 97.7 and 98.8. So I literally had a $1,300 move up to where my stop loss was going to get hit, but my take profits were like $4,000, right? So you're talking a 3x risk to reward ratio, and my key take profits were all the way down at $93,000. So like this was an A+ setup. So my point is your wins should far outweigh your losses. I mean, when you lose, if you're making on average $500 per trade, you should be losing at most when you're losing $250, $100, $50, right? Because you should be able to, every time you win, at the very least, be able to take 2 trades immediately afterwards and be and not be profitable, be wrong on both of those trades, and still not knock out all of the profits that you made on your profitable, right? So for example, most of my trades that I've been losing on are $50, $70, $110. I had 2 trades that were above 200. It was like I lost 220, and then one I lost 250. But when I make $1,900 on a trade, or $2,500 on a trade, if I'm on average losing $250 to $500 per trade, that means it would literally take 4 trades in a row of me losing $500 to take out the one $1,900 win that I had. So that means that I would have a 20% win rate. 1 win for $1,900 and 4 losses for $500, and I would still be break even with a 20% win rate. So my point is that if you're winning more than you lose in terms of money, and you're winning more trades than you lose, then you are going to be profitable. You can still be profitable losing more trades than you win, so long as your risk parameters and your position sizing is proper. So that's kind of my public service announcement before signing off. If you like content like this, man, I appreciate you. Everybody that's in the comments section, the people that like actually, like we got like 24 people in here. The people that actually do request things, I appreciate you probably more than you'll ever know, because it helps me look at things that I might not necessarily be looking at in the market. And it helps me like learn, right? It helps me learn with you and look at like altcoins or assets that I might not necessarily be looking at right now. You know what I'm saying? And so, yeah, I mean, I truly, like, seriously, I appreciate everybody that's on here. And yeah, I'll see you guys in the next video. But if you want me to look at anything, even if you're not watching this live, just drop it in the comments section. We'll look at it. We'll look at it on the next stream. We're doing these streams every day, man. These streams have been very consistent. These are something that you can count on. And we're going to continue doing them. And honestly, I'm going to roll out a lot of things for the community in the future as well, to support you guys because you support me. So I truly appreciate that. And I'm going to keep doing it. We're going to keep doing it. And we're going to see if we can take $3,000 and turn it into $100,000. We'll see if we can take $3,000 and turn it into $30,000 in 30 days. I don't know. We'll see. Right. So we're just going to keep the trajectory going. And, you know, anything that you can do to help by just supporting the channel, hit the like button, hit subscribe, boom, bang on the notification bell, comment anything that you want in the relevant sections, give me altcoins to look at. I appreciate it. And I will see you in the next video. So everybody, I hope you have a really good day. I hope that if you're taking these trades, I hope that you're being profitable as well. If you're following my trades, man, I appreciate the vote of confidence in me as well. And, you know, hopefully we continue to go out and kill it. And Chip Sanity, absolutely. We will look at Pax Gold, Pax G next time as well. And honestly, that's a really great asset to look at because that's like one of the assets that I keep my finger on the pulse of all the time. Like I trade gold, I trade silver, I trade crude oil, I trade the S&P, and then I trade crypto. You know, I trade a little bit of Forex. I can trade Forex. I just stay a little bit more away from it just because when you're trading so many different markets, that's the other thing. One other public service announcement. You don't want to trade and pardon my French here, but I don't know any other way of saying this. You don't want to trade a shit ton of markets all at the same time, right? I want to know Bitcoin like the back of my hand, right? That's why I'm like trading Bitcoin, and I'll randomly trade altcoins, Ethereum, Cardano, XRP, whatever, randomly. But my position sizes are much lower on those positions. Like if I'm making a $6,000 trade on Bitcoin at a 10x leverage, if I'm trading Ethereum, I'm only trading that at maybe 5x leverage, and I'm doing $1,000 trade, right? And then even further than that, if I go down to Cardano, XRP, AVAX, something like that, I'm probably only trading it on a 2 to 3x leverage, and I'm probably only doing anywhere from a $250 to $750 trade, right? So understand the assets that you're trading daily. Understand those, know those like the back of your hand, baby. Other assets that you're keeping your pulse of the market on, don't go as risky or as big on those, right? So for me, if I'm going to pick like 2 or 3 things to trade, hands down, I'm trading gold, I'm trading Bitcoin, I'm trading the S&P. That is it. If somebody came in here and was like, gun to your head, Drew, you have to pick 3 markets. You can only trade these 3 markets for the rest of your life. You don't get to trade anything else. What are you picking? S&P, gold, Bitcoin. Easy, right? The only thing I would ask is like, hey, if one of these markets like goes to 0, can I like pick another market? Like that's it. Because what if Bitcoin becomes nothing in the future, which it never will. I get that, but you see what I'm talking about. Gold's been around for thousands of years. S&P is probably not going anywhere anytime soon, but just understand the markets that you're in. For example, with gold, right? Understand what moves gold. Go look at the miners. Go look at what is coming out of the ground. Go look at the market forecasts of what is going to be coming out of the ground, right? Go look at what the central banks are buying. I'm giving y'all free game right here. Go look at what the central banks have in their vaults. Go look at what the COMEX and the London Exchange have in their vaults as it pertains to how many open futures contracts they have. A lot of times they're leveraged 15x, 100x, right? Understand the amount of gold on the market and what it's being used for. Is it all going into the jewelry market and the central banks aren't holding it, right? Or are the central banks taking it? Or are the mints taking it and then they're selling it to retail people, right? Understand what's on that market. Same thing with the S&P. Understand that the S&P is going to be driven by GDP numbers, right? What does our economy look like? Okay. What does the Fed decide to do on interest rates? What does the CPI, the inflation numbers, come in looking like? What do the jobs reports come in looking like? What does the non-farm payroll come in looking like? What does the unemployment numbers look like? Are we at war with somebody, right? Those types of things are what's going to drive the S&P. And then same thing with crypto. What type of global policy is governing crypto right now? Are there any major nations that are adopting crypto as a acceptable currency inside of their, inside of their system? Are there people that are there governments that are buying silver, not gold or silver, Bitcoin as a reserve currency to hold long term? Is the S&P going up or is it going down? Is the US dollar going up or is it going down? That will affect gold prices. If the US dollar is strengthening, gold retreats. If the US dollar is going down, gold strengthens, right? If the US dollar is going up, the S&P likely is going to be going up as well, which can drag Bitcoin up. And then if Bitcoin is moving up or down, that will affect the altcoins. So understand the markets that you're in. With all that said, I went off on a crazy tangent. I appreciate everybody listening. Beast mode, I appreciate that. Options wheel strategy on Bitcoin. Yeah, dude, like he's probably talking over the majority of people's heads. I understand what you're saying. It is a good strategy. I saw a lot of people killing it on the wheel strategy on Palantir, PLTR, which was a stock. You got to be careful with options, though. Got to be careful with options. I might teach people how to trade options. They're very risky. They're 100x leverage in the stock market. It's wild. It's wild. I literally took $300 and turned it into $6,900 using options one time. I think that was like 2022 or something like that, just to see if I could, right? It was wild. Options are nutty. So yeah, with all that being said, I won't keep you guys anymore. I will see you on the next stream. I appreciate everybody for showing up. Drop some likes, drop some comments, and obviously make sure you subscribe to the channel. And then boom, bang on that notification bell. I'll see you in the next stream. Appreciate you for showing up. Peace.